All right, let's just get right into it. If you're a founder watching this, think of this less as an explainer and more as a direct request for a startup. We're about to lay out what might be one of the single biggest opportunities in software today, literally turning the venture capital industry itself into code. And this quote right here, from a thought starter by Steven Strauss, it really captures the whole mission perfectly. The idea is simple, it's kind of radical, and honestly, it's incredibly lucrative. What if we could build an AI that does the job of a VC partner, and then just plow all those massive cost savings right back into the ecosystem? Okay, so before we dive into the nuts and bolts, just a quick but important heads up. This whole explainer is based on that thought starter by Steven Strauss. It hasn't been prepared or approved by YC or any other investment firm out there. We're just exploring a really powerful idea here.
So, just how big is this opportunity we're talking about? Let's put a real number on it.
Right now, the U.S. venture capital industry has about $1.2 trillion in assets under management. You know, that's the giant war chest they use to fund startups.
And on top of that massive pool of capital, VC firms, they charge a management fee. It's usually right around 2% a year. That's just to cover their own costs, whether the fund does well or not.
So, let's do the math here. 2% of $1.2 trillion is $24 billion. Every single year. That's the annual fee pool. That's the salary for the job you're being asked to automate. It is a huge recurring revenue stream, and it's paid for work that is just getting more and more vulnerable to disruption. Which, of course, brings us to the next big question. Why is this industry, the very industry that funds the world's most advanced tech, so vulnerable to that same technology?
Well, the vulnerability, it really starts with a pretty brutal mathematical fact. Half of all general partners, the people making the actual investment decisions, are, by definition, average or below average. I mean, think about it. Just replacing that bottom half with some hyper-efficient software could unlock billions.
Let's just put it side by side. The current model is, well, it's kind of artisanal. Human GPs have biases, they can be slow, and a lot of their deal flow depends entirely on their personal network. An LLM-powered general partner, though, it can be programmed for objectivity. It can make decisions instantly. It can analyze all the available data, not just what's in its network. And it can scale, like, infinitely.
And look, this isn't some kind of sci-fi future. The whole argument here is that the technology is finally here. The AI isn't a future prospect anymore. It's ready to be deployed today.
And this table here really shows you the key breakthroughs that make this possible. You've got the Wade test, which shows AIs can basically clone the judgment of C-suite executives. You've got research showing LLMs can be just as persuasive as people in negotiations. They can even provide empathetic founder coaching 24/7. Now you combine that with all the rich data from APIs, and then add alignment layers to prevent bias, and boom, you have the recipe for synthetic GP.
Let's just double-click on that Wade test for a second. In one study, employees could only tell the difference between a real CEO's answers and a fine-tuned AI's answers 59% of the time. That is barely better than a coin flip. The line between human and AI executive judgment, it's already incredibly blurry.
Okay, so let's shift from the theory to what's actually happening on the ground. These AI investors, they aren't just concepts anymore. They're out there in the wild, and they are making deals.
And we're seeing this whole spectrum of innovation pop up. On one end, you have data-augmented firms like EQT. Their motherbrain AI basically just sources deals for human partners. Then you have Moonfire, where a tiny AI-powered team has the output of a firm 10 times its size. And then at the far end of the spectrum, you have fully autonomous agents.
And this is the proof point that should get every founder's heart racing. An AI angel investor called NoCap went from sourcing and evaluating a startup to signing a safe and wiring $100,000 in minutes with 0 humans in the loop. That's it. It's the end-to-end automation of the core investment process. It's been done.
So the tech is ready, the market is absolutely massive, and the pioneers have already proven it's possible. So the question now is, what are you going to build?
So, if you're a founder asking that question right now, looking for a huge market to go after, here is the blueprint. Look, you don't have to boil the ocean here. You can start by solving just one of these key pain points. Build agents for outbound sourcing. Create a tool for one-click diligence memos. Automate the whole investment committee prep by summarizing calls and auto-generating decks. Or you could build a system for daily KPI monitoring. Every single one of these is a massive opportunity for a SaaS or an API business.
And here it is, the final explicit call to action. If the idea of compressing that $24 billion fee pool into software gets you excited, if you want to give founders faster, more objective feedback, then the challenge is clear. Build something. Build a prototype that just eliminates one single weekly GP meeting and show the world what's possible.
Now let's be real. This kind of disruption is not going to be a walk in the park. It's really important to acknowledge the big open questions, because honestly, solving them is part of the opportunity. This is the next frontier.
So first, there's the long game problem, benchmarking, right? Venture capital plays out over 10 years. How do we actually measure if an AI is a genius investor or if it just got lucky in the short term? We're going to need totally new metrics for this new kind of investor. And then you've got the immediate legal headache, liability. And this is a huge one. If an autonomous agent makes a catastrophic mistake, a bad investment, a legal error, who's on the hook? The programmer? The firm that deployed it? The AI itself? This is a completely new legal territory. And finally, really, the thing that underpins all of this is the business model, the incentives. Do you sell this thing as a classic SaaS product to existing funds, or do you build a totally new kind of AI-first firm that earns a share of the profits, the carried interest, just like a human partner would?
But for all this talk about tech and finance and law, this entire revolution might actually hinge on a much simpler, more cultural question. Will founders, the very people this is all built to serve, actually accept a non-human partner? The big bet here is that once the speed, the objectivity, and just the raw economic advantages become undeniable, the answer is going to be a resounding yes. The race to build that future is officially on.